All right, guys. Good evening. Hope you guys had a great weekend. You guys did some research, did something over the weekend that can help you with your trading investments. Can somebody just confirm in the chat that you can hear me and see my screen clearly? Trading view on the left and then the Excel sheet on the right.
Yeah, you're good, Ricky.
You're good, bro.
Awesome. Thank you. And guys, keep yourself on mute. And any questions that you guys have, just send it to me. And in this session, I want to interact with you guys a little bit in the sense of I want to hear from you guys, in this session, what you guys think, why it might be beneficial, why it might not be beneficial. I think I can answer questions better than. Otherwise, I will just be sharing my own views on leaps. All right. Now, the main session of this, the purpose of the session is, why do we invest in leaps? What's the main purpose of it, right? A lot of you guys ask. Many of you guys are playing weekly options. You're doing great, right? Congrats. And some of you guys are doing equity trades. Congrats, you're doing great. And some of you guys are kind of lost in this sense, maybe lack of experience, or you're just unable to understand how to allocate your balance in the market, right? And here at My Stock Life, myself, T, LB, we try to give you guys our best experience from time to time of the things that we have learned, and we share it with you guys openly, right? And so first thing, parking money and leaps count. First of all, what exactly is a leap? How do you define a leap, right? So I'll just write it here. Just give me 1 second, guys. So I'll just merge this. All right. So what is a leap? That's the first question. Leap is anything. Now you might get different answers online or from different people, right? I mean, that does not mean they're wrong. It just depends how you define it. I personally define it an option contract, right? 8 to 10 months or more expiry. All right. An option contract with 8 to 10 months away from the current date. And then or more expiry could be so tonight right now is 2021. It could be next November or something after October, or maybe 2023, and then even 2024 is also available now. All right. Usually options go up to maximum of 3 years depending on the underlying asset that you're trying to trade. And some options only go to 6 months out. Some takers, they only have up to April. You'll see they don't have any further out options. All right. So leap is any option contract with 8 to 10 months of expiry. Now, some things that you need to know about leaps. They're expensive. The reason they're expensive because there's a lot of premium added, right? So basically, what I mean by this is when we have a leap, right? If longer the expiry of the option, so longer the expiry of the option, the more expensive it gets. The more expensive it gets because you're buying time, and buying time means you have more time that the chart can work in your favor. So the market maker will always add more premium to it. Okay, so they're expensive, they're premium added, they're less risky. Why are they less risky? Because buying time equals more chances of being right. So, they're less risky because you're buying more time from the market, right? There's a more chance that the stock goes in your favor. So the market maker wants money from you for that. All right. And they can act. They can act as an asset. Now, short-term leads or short-term options that you have, they cannot act as an asset because today, if you have $1,000 in a short-term expiry, tomorrow, if the stock is down, the asset might not be worth nothing. But on a lead, if you have $5,000 in a certain lead, if the stock, and you have more than 1 year time, if the stock dips 10%, that lead will still have value of 70 to 80% left. It will not be down too much depending on the volatility. So you can still define it as an asset, but some sort of value will be left in there. All right. And another thing, if a stock goes in a nice little downtrend, what can you do with a lead? You can manage it better. How can you manage it better? We'll go over this once I go in the numbers. You can manage the lead better than closer expiry dates. All right. You can manage the lead better than closer expiry dates. The reason being is the one example we'll go over is Twitter leads that I have and what exactly happened with them and how I'm going to manage them in the coming month. Right. All right. And leads, when the stock goes up a lot, it gives you options. Option to do more stuff with it, right? Or work out another strategy with it. Work out another strategy with it. All right. Leap can cost you, depending on the stocks, some leaps may only cost $1. Stocks that do not move much. For example, stocks that are only going under $5 and they trade like a 4 or a 5 or whatever it may be, leaps will be cheaper on those. Okay, so if for example, DPRO or Call by T that we bought, I think is a great drone company. I'm also looking into it. They have earnings on Monday. If you don't want to buy closer data, most of these guys bought April calls and they were going for fairly cheap. The reason being is because the stock is trading under $4 and it's traded under $4 for the past few months. So the $5 leaps, you can get them under $1. But if you're buying leaps on a stock like Amazon or Apple, or let's say Apple, you're buying leaps, 170 leaps after 1 year, they might cost you even $20. And Apple's trading at 150. But if you're buying leaps on a stock like Amazon, for example, the stock's trading at 3,500 right now, and you're trying to get a $4,500 leap, that might cost you like over $200. So it's very expensive, which is $20,000, right? So it depends on what stock, what kind of leap you're buying. Now, first thing, we'll just go the main question that you guys had. How do you know which stock to buy leaps in, right? So that was your question. So we'll go over some chart. How do you know which stock to buy leaps on, right? That was one that you guys wanted to know. So let's go on this. And Boogie or T, you guys can just answer in this one. Thank you. And so how do you know which stock to buy leaps on? So let's look at some charts here. Now, one could be a stock that you follow very closely. For example, everyone knows I follow Amazon almost every day. And if I think there's more upside coming on that stock in the coming months or coming year, I might buy a leap on. Or if a stock has been trading sideways for a while, I think is going to do well, I can buy a leap on. So one stock right now is Tilray, the cannabis sector. All right. So this is a stock that had gone up a lot. This is just an example I'm giving you guys. You guys can give me your own tickers also. I want to interact with you guys and I can give you guys my opinion if I will buy leaps on that or no. All right. So, sorry. I got the on Friday. Which one? You got leaps on those? Nice. Okay, so T bought some leaps on, and T's here with me. I think he's going to stay if you guys have any questions for him. So T got some leaps. So if you want premium alerts on Friday, right, and later on maybe he'll explain why he got leaps on those. So I would love to hear his views. On Tilray, for example, this is one stock that T's been following for many years, and I've been following it myself. And this stock sometimes gives these big pops when some news comes. We had one huge pop back in January, all right, this right here. And now for the past many months, it has been going down. And now you guys can see here, I already have the red box drawn here. So my thought process here is that it's going to hold or bottom out here. And in case if it goes sideways, I don't want to buy closer dated unless I go too deep into the technicals. And I see that a lot of some news may be coming out in the month of January, February, or maybe in November, let's say 2 weeks, maybe there's a meeting on Fed on cannabis, something related to that might pop the sector. I'll go shorter dated. But there's no catalyst coming up, but they're coming up in a month or two, and you want to catch this bottom. So Tilray here has marked a bottom. I got my leaps here a little early, right? Back in October, I believe. And so here you can see Tilray has been marking a bottom here. This is a very strong support. Now, I'm keeping some downside in mind also. Because the stock has been on a nice little downtrend for the past many months, the further out calls have lost a lot of premium. There is no upside to it. All right. So they have lost a lot of premium based on the Greeks. And this is a very strong level. This right here is a very strong level, as you guys can see, because this is the level where Tilray broke out before, right? Back in the Jan. And now this might be the level where they might put a stop on this stock. And then I want to look at some technical indicators, right? Right here. On the MACD is also going to positive territory. And then obviously a little fundamental. We have some news which are going to come up in Jan and Feb on cannabis, and they're already going on currently. So Tilray is one stock that I thought, you know what, is putting in a nice little base. And on the monthly, if you look at it, if on the monthly you look at it, it's putting this falling wedge type of pattern, which is very popular in the trading world, right? There's a good chance that this stock right here, so you guys can see, it might be time that it goes and retests $13 or $16. So what I did, I bought the June calls, right? So almost about 8 months out, I bought the June $15 calls. They were going for reasonable. And I scaled into my first size on these calls at $2.40. All right, $2.40 on Tilray. So this is just one example I'm giving you guys. I bought the June 15 calls, all right, For $2, my average was 220 or 240, I believe. I don't, you guys can see in premium alert somewhere. And I let them alone. Now, Tilray, even if it goes sideways here for a bit, now the next question is why did why did I go 15 or 20 strike? That's just up to me. I could have gone a $10 strike, but I went the 15 to 20. I thought it was fair value. The stock's been down on a down run, and this is a nice little base problem. Base is building here. If Tilray pops above the October highs, which is $12.16, my technical level is through 12 and then 14 is likely. If I get that move, the delta on these calls. Now, one thing I look at on leaps is delta. The delta on these calls is probably around 40 cents, I believe, if I remember correct. Maybe I may be wrong, so I'm just making these numbers based on how on my memory. On 40 cents. So every $1 move, if Tilray goes up $1, these leaps will go up 40 cents. And then the delta will also increase as the stock makes a little move up. So I want to get the best return. Now, let's say that nothing happens to the stock, it comes down, right? If nothing happens to the stock, it comes down. Let's say Tilray decides to retest test this support right here of $8.20. Then on the daily, I want to see how well it holds. And maybe I can average down these leaves. Maybe they will go down to $1.20. They might even get cut in half. I'm going to worst case scenario. So at $1.20, I might have my second scale in. All right, second scale in. So now my depending on how much I buy, maybe I bring the average down to $1.75, for example. And once it builds a base and Tilray, let's say, decides to take out 10 or 12 or $11 in the coming months, right? It comes back into this base, right? I mean, it's not just going to keep on going down. I mean, that's just common sense. And with the news that are coming out, even if it comes back to, let's say Tilray comes back to $11, I can now manage this trade. I might be at break even, right? Not in every trade you might make money. In some trades, even if you get to exit break even, that's a win on your own because you saved your capital, you saved your cash. You did not lose money on the trade, right? So you're being picky with your trades. In long term, that will help you keep your account up. So I can either break even or I can just go more technical that maybe a pop is coming now and Tilray maybe it goes to, let's say, $13, right? Maybe let's say it goes to 13. I'm just making stuff here. And now these might be going for $2.90, for example. Here, I can maybe scale out what I scaled in at $1.20, take those profits and now hold these calls. And with this, I will eventually have a stop loss on my leap that, you know what, now I made this money and my leap, if it comes back to break even, I will exit. I will exit at break even. Overall, a green trade for you. So here's where the managing comes in, right? So because we had more time, more chances that we're going to be right on this trade. And this trade I'm going to do manage live in front of you guys. I'm already in the trade. Right? Currently, I think it's down a little bit, but on Friday we had a little pop in, so it looks great. So let's see what comes in. What's the next strategy that you can do with the leap? Now let's go back to Ford. Now Ford is one stock, I think one of the best trades of my life, I think, that I've done in the sense. So Ford right here, why did I go in Ford with the EV with all the news that are coming out? Right, I went to a monthly chart. Month out. So went to a very long monthly chart on Ford. All right, like we went to like a 40-year-old chart on Ford. So when I bought Ford Leafs right here, for me, I was simply looking at a monthly chart that, monthly is building up. It had a nice little run up all the way from the pandemic and whatnot, right? To me, I avoided this move. For me, this move did not mean much because it was a pandemic move. I don't even count it because every stock did this huge dip. So I don't even count it. I was basically looking at the price and you know what? The move actually started from $10. So for me, this move didn't mean nothing. For me, Ford's chart was based out at $10. This was the dip that was caused by the pandemic. So I don't know how many of you guys can relate to what I'm trying to say here. So this dip, I completely ignored it, right? I did not look at it. It went from $4 to here. I mean, some stocks I do, it depends which stock. But Ford, I completely ignored. But basically the move started from $9. It broke out, right? On good volume, it was a very good move. It built a base, like a bull flag here. And I simply just wanted to catch this uptrend. And with the EV craze and all these things that were coming in, I got the leaps. What leaps did we get? And my leaps actually went down by a lot in the first 1-2 weeks, those that followed. So let's look at the Ford example. What did I do with the Ford leap and how I managed? So Ford, I went 2023. So we bought the Jan 2023, $20 calls, right? My entry was, I believe, a $1.03, but I'll keep $1 whole number, right? I think it's pretty close. So from when the trade wasn't working out, I went to, so let's look at the weekly. I didn't do anything because I had time, right? Options are sometimes volatile. They go for up and down. right? My entry on Ford was right here. My entry on Ford was right here. I think back in August. So this is when I bought Ford. But unfortunately, for the following week, it took a little dip. I did not panic. The reason I did not panic because I had a lot of time on Ford. I bought 2023 for a reason so that I don't have to worry about anything, right? I bought 2023 Jan for a reason so I don't have to worry about my because every time we enter a leap, you have to expect downside. You don't know you don't know, like you cannot just catch the bottom. Sometimes you catch a train, like you stop, or maybe the stock goes down from there. And that's exactly what happened with Ford. But I did not panic. I was like, you know what, let it base up. The next stop is right here near 12, 11. I'll manage my trade here. If it comes to 12, it comes to 10, I'll have my second scale and maybe in December, maybe in Jan, right? I'll give it a few months, couple of months, right? And but it's just went up from here. And on this rip, and then we had this huge rip. I did not sell all my calls here. I started scaling out on levels. My levels were what? Resistance. Every resistance I scaled out a little bit and I kept a portion. So these calls, when they were trading at 350 last, right? Last they were trading at 350 on Friday. So up over 250% already, and we still have more than 1 year to go. How far does this go? Then technically the resistance that if you zoom out, the resistance is all the way to 24 bucks. But what did I do? I'm like, you know what? I'm getting a lot of premium on these calls, $3.50. So I decided, because I looked at the $25 calls, and I'm like, you know what? They were trading at $1.19 or something at that time, right? And these were trading at $1.19, and these were trading around $3, I think, or something like that. No, these were trading at $2.40 at that time. I know, I remember the numbers. $2 and not in 40, they were $2.37 because my spread cost was, yeah. So they were trading at $2.37, okay? So what I did, so let's say if I had just an example, for example, basically, let's say I had 10 contracts left. 10 contracts, after all the scale outs, I had 10 contracts left. What did I do with this position on Ford? Instead of selling my 20 calls, I sold the $25 calls. So I sold 10 $25 calls for $1,119. Now this $1,119, I locked in my $1,000. I locked in my 1,000 principal, and I still nailed $119 profit. And I'm still in the Ford trade. Now what happens here? I turned this into a vertical spread. So my max profits on my vertical spread is 25 minus 20, as you guys know, which is $500. But this is my free money in Ford, which is sitting. I'm not worried. So I don't care if Ford does your two scenarios here now. On Ford, let me remove my drawing. This looks really messy. Now, two scenarios on Ford here. Number one, Ford, let's say Ford dips here in the following week. Let's say I'm expecting this retest of $16 and $15, okay? Ford dips. What's going to happen on this dip? The $20 calls is going to lose a lot of premium, and so is $25 calls. Maybe on this dip, the $25 call will go for maybe 30 cents, because it's going to lose a lot of premium on this. 30 cents. I have two options here now. And I think Ford is going to reverse here on an uptrend, right? I think so. What I'm going to do, I'm going to hold these calls as I have, and I will buy back the $25 calls. So I will buy back 25 calls, which will cost me $300. Remember, I collected $1,119, so I'll give $300 back to the market. I'll buy these calls back, and now I have the $20 calls, which cost me very less. And now I'm holding calls alone, and I want to rip. Let's say it rips in the uptrend in the coming months. I can choose to sell my $20 calls for all the profits. They were free, or I can choose to buy these back, sell these again at a higher premium. That's up to me how I want to do it, depending on the market. Does this strategy make sense to you guys? Yes, no? Awesome. Right? Or let's say Ford keeps going up. Ford has, like, I sold my things here. I sold my turned my strategy into a vertical spread here, but Ford keeps running. Now what happened? I don't care. I'm still making money. The value of my spread is increasing. I can exit the spread at any time, up to maximum of $500. If Ford tomorrow, and I want Ford to go up, why would I want it to go down? The longer, let's say it goes to 23, 24 bucks, the value of my spread will probably be $2.50 or $2.40. I will sell those 10 spreads for $2,500 and lock in my entire position. So that's one strategy that you can do with leaps, where you can lock in your profits. All right. Now, one stock that we're in. Now I'm in one of my leaps. I think only one leap went against me this year, which was Baba. What happens with some of the other leaps? Now, Baba here, for example, I bought a lot of leaps in this stock back in so this is the weekly chart I'm looking at right now, right? I bought a lot of leaps on this dip right here on Baba at 266. Then I averaged down here. Okay, and I didn't sell any leaps. I actually bought more leaps here, and I averaged down. I was up very nice on my leaps. I did not sell a single one. I'll be very transparent. I didn't sell. Baba came down. Then Baba built a base here. And I don't regret it because I made great decisions. That's fine. I bought more leaps right here. But Baba failed again, right? And here, I did not buy any leaps. What's the reason for this? I will tell you right now. Why? The reason I didn't buy leaps here, because now the Baba has lost, went from 320 all the way to 158. I trade short-term options, which is fine. The reason I'm not averaging down here is what if Baba goes into this category where it builds a long base, right? Overall, I'm bullish on Baba. But what if Baba goes into something like this, into this phase right here, where it's just moving sideways and just building a strong base and looking for some proof that, Baba's not going to dip no longer here. What if it builds a strong base here for maybe 3-4 months, right? So I gave myself some levels. I said to myself, you know what? I figured out something. The Baba, if it gets 180, is confirmation. No, sorry, investor confidence, I say this, is investors' confidence, right? I'll start looking into it more. And then 220 is confirmation. It breaks the trend. It's confirmation, likely uptrend. So I'll load, so now I will maybe move out to 2024 leaps, not my current leaps, maybe 2024 leaps. All right, sometimes it's okay to take losses, but if you're consistent with your positions, overall, you will be up. All right, overall, you will be up. All right, so the reason I'm not averaging down here because Baba's failed too many times. The next downtrend is, even though I love the stock, but then I have to expect downside. It's already 129, 120. What if Baba gets this? Like based on this trend, maybe it goes much lower. But there's a very strong base here. I will wait for 1-2 months. If it holds this strong, base strong, if it does not break out, maybe then I'll buy the leaps again in January or maybe February in the start of next year. All right, that's the reason I'm not adding any Baba leaps right now, because keeping downside and sideways movement in in my mind, and the leaps are losing a lot of value right now. All right, and if it rips, then I already have the leaps. Maybe I'll get out with a loss. I'll manage them better and then roll out. Okay. Lucid is another stock that I bought leaps on, right? So if you were in my stock life, we caught these leaps right here. We caught the leaps just before the move happened. The reason I bought leaps on Lucid, I'll tell you guys right now. And if you attend pre-market for the last 2 months, Lucid had news here when it was moving quite a bit. This rip, Lucid had news. This rip right here, Lucid had news. I went over pre-market. I wanted to get into Lucid, but I said, it's the first rip, likely gets rejected at resistance. That's exactly what happened. I could have been wrong. It built a little bull flag. And when it started ripping here, then the Lucid delivery news started coming out that, Lucid is delivering their cars and all these things are happening. And right then, one day before I jumped into the leaps, I was not expecting this move so fast. I'll be honest with you guys. I did not know this was going to happen, but great that we caught it. And I entered the leaps right here at the 200-day moving average. 50 was approaching the 200-day moving average, which is very bullish. The MACD was showing a lot of strength. We got into the leaps. We got in at a very cheaper price. The reason being because it was sideways, so there was low IV on it. We bought the January. So let's look at the Lucid leaps and what exactly my plan is to do with them. Let's look at Lucid. LCID. Lucid, we got the January, June, I believe, 2023 leaps. And I have the Lucid, I have the 40 calls, $30 calls. I got the 30, no, Lucid, hold on. Let me just look at my alert, which calls I have. So I have Lucid $30 calls, Jan 2023, $30 calls. Don't know how I forgot that. I had the Lucid Jan $30 calls at $8.60 average. And now as soon as Lucid broke out of this trend, as soon as Lucid broke out of this channel right here, right, that was obviously going to help with the price going higher really fast. The premium gets added. And because of this huge spike, the IV in calls increased, right? A non-stop move to the upside, the IV increased in those calls. These calls were trading at 20 bucks. These calls are now trading at around $19, $20. And I said to myself, you know what? I'm not going to sell my calls. I will not sell my calls. Let me wait. It's built a bull flag. It's gone up again. We have the Rivian IPO. So certain things I'm looking for along with technical, some fundamentals I'm looking for. Rivian IPO, the target zone is right here. And I think this can easily reach 57.50. Now, the 70 or the $50 call, the 50 calls were already trading above $10, I believe. right? I could easily sold those for 10, lock in my profits principal, and have that $20 spread for free, which is $2,000 until Jan 2023 for Lucid to stay above 50, right? And just lock in those profits. But I'm waiting for maybe 80 or 90 calls to sell them at a $10 move. So if Lucid gets 52, 53 here, I'm gonna sell the 80 or 90 calls for 10 bucks. I will lock in all my principal. I will lock in all my principal, right? Principal and some profits, right? By selling these calls for this price, and my entry was 860. Now I've created a $60 spread. Let's say I go with the 30-point move only. I have created a 60-point spread. All right. What does the 60-point spread equal? Right, max value is 60 points, so $6,000 per spread. I'm giving myself under 2023. Let Lucid play. If I'm on it, let's say tomorrow Lucid gets 72 or it gets 80 bucks, whatever it gets. I don't care what happens here in the short term. My spread will be worth somewhere between 3,000, 4,000 bucks. 30 calls in the money, and if I sell 90, if it's trading at 70 bucks, my spread is going to be worth 30, 40. I can choose to sell it for 30, 40. That's $400 in my that's $400 profits. Sorry, 400%, right? Or tomorrow, if Lucid dips, it goes up here and it dips here. Now I know this is strong support zone. What happens here? I can simply just buy back these calls, $89 calls, maybe for $2 or $3, maybe $2 or $3, $2 or $3 buyback, right? And I am back in my 30 calls, absolutely free leaps. Makes sense, but plays like this take a lot of patience. They take a lot of discipline. All right. Andrew's question, so I'll try answering your questions now. These are some of the leaps that I want to go over why I buy them. Since leaps are pricey, what's the percentage of our portfolio should we put into a leap or two? Maybe let's say if the trader is on a 1 to 5K account. Great question. So on a 1 to 5K account, now, let's see how would you, now this is just my own opinion. Many of you guys may have different answers. The T might have a different answer. LB may have a different answer, right? But on a 5K account, let's say, right? Let's say on a 5K account, I will simply keep $200 to $300, so 200 to 300 day trading. That too, if you're really disciplined, day trading one trade at a time, all right? And from a 5K account, I can put up to 1,000 into leaps. Now, these are just numbers that, according to me, depending on what, where these $1,000 in what kind of leaps. The leap should not cost more than, I would say, $1.50. It has to be less than $1.50. There's so many leaps out there which you can catch for $100.50 that double and triple every week in the market, and we catch so many of those. Right, DPRO, for example, is going for like 50 cents. Right, T alert, and then let's see what leaps T added on thing. So T added a monthly November 19th BA for 93 cents. No, right? Those are not the leaves though, but he added let me see his leaves. Okay, so 2022 June, right? He added a 250 call, which is 1325. So that's not for you guys. So that's for a bigger account. Then he added ATVI June. Okay, so here we go. So he added ATVI June 17. So I'll just write it here. So this is in premium alerts. He added ATVI June 2022, 80 calls at $2.93. I will simply just buy one contract only. Okay, because I want to diversify. I don't want to put all into all my leads. I will buy one contract here. This is just my own thinking. And then he added pins. So he added pins. Also, he added June 17, 2022, right? He got the pins 55 calls. Wow, that's fairly priced. 55 calls. I think that's a great price. These were trading more than 20 bucks just about a week or two ago. He got them for $3.80. Maybe I'll buy one contract of this, and I will not buy no more. So this is about roughly $600, $650. I'll just simply buy these. If these work out, if the stock goes up, so let's say for example ATVI, how do you manage this? Because you have until you give yourself a lot of time, right? The reason he gave himself time because he might be expecting sideways movement or even downside to manage it better. I don't know, right? Or maybe he's expecting it's going to rip, uptrend starts, and he'll slowly scale out. Now ATVI here, you want to wait and see how it does it hold the next support level 74? Does it break out 79? If it breaks out the $80 level, you want to see here. Gap down. There's a gap down. Oh shit, I didn't even see the gap down. Sorry guys. So ATVI gap down here. I couldn't see the candles. Thanks, G. they were hidden with this volume bar. But so ATVI had a huge gap down, so that's the reason he bought these calls. I think they're with it, and ATVI has gone down. So basically, as long as it holds the low of the gap down, which is roughly 64, 65, I think these leaps are in play, right? And you just wait until the movement happens. Maybe it fills a gap, maybe this week, maybe a retest and goes here. And let's say if it breaks the low of the day, what can you do with the leap? If it breaks the low, right, you just zoom out, for example, you go into the next support level, right? How does this support hold? $60 support. And so, does it hold here? Here, maybe the leap gets cut down $1.50, and then you would average down here, right? Or let's say you caught the perfect bottom and the leap starts going up. It's just going in a nice little uptrend from here, right? And if this stock makes another $2, $3 move, these leaps are probably going to get a lot of premium added to $4, $5. Now it is up to you as a trader. How do you manage those, right? If the leap goes to $4, you can have a stop loss, maybe at $3.70. Give yourself a 30-cent downside if it comes, and then 370 you can actually get out of the leap, because on a 5K count, that $70 profit is good. Or you can continue holding if you're doing a lot of research and you're involved in the company and see how it works, right? Pins also, I think, is making a nice base. Earnings came out. I think this is a very good play because after earnings, it just shot right back up, right? So no matter what the numbers, but on Friday, a great action on pins. And I think this is a great leap on pins for 55 calls at 380. And now the next magnet level is right here, about 49.50. And if pins gets to this level right here, just 50, a $4 move up, these leaps are probably going to be trading at $6. They will add a lot of premium to it, right? These were just pins was just trading at 60 or more than 62.50 not too long ago on PayPal news. All right. So 2 to 300 day trading, $1,000 leaves of this money, and then one about $800 to $1,200 on equity trades. What kind of equity trades now? For example, maybe something like EQOS alert that was sent, right? A chart which is setting up nicely, a strong base, right? And you have to be very disciplined with stocks like this. Is broke out now, it's retesting these levels. And if you put in, let's say for example, you're trading this stock, you buy $500 worth of EQOS, like as just an equity trade, right? And this makes a 50-cent move to the upside. That's a 10% increase on your equity. On $500, if you make $50 on an equity trade, that's a lot of money. Some of you guys will underestimate that, but that's very good, right? These things add up over time, they compound. All right. So on small names, so with $800 to $1,200, I will do equity trades on stocks under $10, right? Stocks under 10, preferably something that's trading at maybe $5, $4. Hive, for example, that was given out in the chat the other day, right? Hive was, I believe, it was given right here on the bull flag, right here. So you want to look at these patterns: higher highs, right? Higher highs, higher lows, right? And now broke out, nice little bull flag. You buy this worth $400 worth of Hive, you can literally on this move, you catch the 40, 50-cent move, you've made 40, 50 bucks on the equity, and rest you keep cash, right? 2,500, 2,000, I would just keep cash for my peaceful sleep. All right, let's say the market crashes tomorrow, you have enough cash based on a 5K account to trade, right? If you have a 20K account, I mean, all these things as a trader for yourself, I mean, it depends on your risk tolerance. How low do you want to keep your cash? If you're actively day trading, then you want to keep your cash high or even low. If you're exiting before the end of the day, you're raising your cash. So there are a lot of different ways to manage an account. But on a 5K account, whoever asked, so $200 to $300 for day trading, buying 50-cent options, maybe, looking for the 10-cent move, $1,000 in leaps. And you don't have to go all in on Monday on this. You have to look for picky trades. Maybe it takes you a week to find some good leaps. Maybe it takes you a month to find these leaps. All right, you don't have to go in right away. And then equity, you keep $800 to $1,000 for equity, right? Kay is asking, cool guys, Ricky for NVIDIA. Now, Samurais are strong. We saw that absolute rip, right? So Samurais are strong. We saw that rip. It broke out of these channels as well. This was this chart. We put this chart in my stock live. So a whole above 225. This was above this level when I posted this chart, right? Top resistance line with the first resistance, and then the estimated move towards 240 and 260. It obviously gone way past it. All right. And so whoever followed this off the or my stuff like chart space, congrats. And so this right here, Ricky, this is a huge move NVIDIA has made. Long term, I am bullish on it, but this is just a very big move it's made in a short term. I would just say manage. I mean, the leads that you have, personally, I would turn 30 to 40% of the position into a spread, sell out the further out call, and you can create a big spread. And as long as NVIDIA let it dance around here, maybe a break sell, and then later you can exit the spread for some great profits. And if NVIDIA dips, you can manage your spread. If you want to buy back the calls you sold, that's free money, right? I mean, that's completely free money, right? T, thank you for answering back to all the guys. And what else we have here? Indicators, I personally use MACD, 8 and 21 EMA, and then 50, and I'll write them down here. I don't use too many indicators, guys. For me, the best thing that has worked out is the price levels. I think there's nothing stronger than price level. That's my personal opinion. But I use MACD, 8 and 21 EMA, right? It depends on what I'm using at. On 8 and 21 EMA, RSI, and then 50 and 200 DMA, and I will do fibs when needed. It depends. All right. But for me, the most important is price level, right? And then stochastics I use here and there, right? If I'm looking for leaves or something, I might use stochastics. All right. Now, one of the leaves I am in is in Twitter. I bought the leaves in Twitter right here. I got the Jan 2023. So let's go on with Twitter, and I'm going to show you guys how exactly I'm going to manage my Twitter leaves. Let's go with them. So I got the Twitter leaves 2023. I got the 70 calls. My entry was $12.35 from what I remember. They went to 15. I did not sell them at that time, because I was looking for a bigger move. But after earnings, we had a nice little gap down. Social media stocks got hit. So how am I going to manage this trade? I am definitely not going to fall into the same trap as Baba, because that took me 1 year practical experience. Okay, on Baba, it was practical experience for me. All right, and it takes time to learn these things. On Twitter, I have my support zones already drawn right here. Okay, I'm going to see if Twitter can hold in this base, if it can hold in this base and then reclaim this price levels. And I'm going to see how well it does. I don't want to get stuck in a pop here and then a downtrend. That I won't get stuck in. And if I do average down here on Twitter in the coming weeks, I'm going to make sure it goes in an uptrend. If it doesn't, I will simply cut those averaged down leads, not the entire position, just what I averaged down on. I will simply cut those for break even or 10% of loss. All right. Okay. So that's my number one strategy on Twitter. Or if it continues going up and I average down, then great. Then I cut the bottom, I average down, then I'll manage here into resistance zone. Or if Twitter fills this zone and comes into the next support zone, which is right here in the $40 or 40s mark, which is possible, right? I want to keep the downside in my mind. I will average down here. I gave myself enough time on Twitter. I have lots of time on Twitter, right? I'll average down on those leaps here. They're right now going for $7, I think. So they're cut down almost 50%. I'll simply buy some here under 6 maybe, or whatever price I get. I'll average down. And then when it gets into this base, I will simply scale some out, right? To lock in some profits or lock in some of the principal, and I'll see how it reacts here. And then I'll hold some for long term. All right. NVIDIA leaves that I had, for example, NVIDIA leaves, I bought them in January, I think, of this year. I bought NVIDIA leaves right here. I'll go over my NVIDIA leaves. Went from pre-split. I bought the NVIDIA leaves right here in Feb, somewhere February 2nd, where the date was here. It ripped from 70. They went to like 120. I did not sell. And then they got cut down to $40. I held through this entire turbulence, all right, for many, many months. Ripped, I held through here. And they were going for it a very big discount. But eventually, NVIDIA just broke out. And those leaps, my entry was $70. They went down to 40. First, they went to 129, 130. Then they came back to $40. I still held. And now they were trading at maybe $400, $500 per contract right now. Right. So that's leaps, right? But I'm already out of my position for a good profit. I sold them back to back. And then AMD leaps that we had, right? A huge turbulence I went through. So these leaps require a lot of patience and something that you can afford to hold for long term. Same with AMD. I bought AMD right here in this zone. And then for many months, it just stayed in turbulence. We bought our $100 leaps for $23 and they went down for $7. And now they're trading about 40. All right. Which we also, many of you guys in the group have them and you guys locked in profits and some are still holding. And now the Amazon leaps that I have, right? I got the $5,000 calls. I bought them I think I got them here somewhere. Okay, I bought those leaves, I think on this here or here somewhere. I bought them, no, I actually bought them here on this profile. Yep. $500 calls, I bought them at 139. Dip, I held them through, rip, rip. I'm just holding because I'm expecting downside and sideways, and now they're up. Like they were trading at 150 on Friday. I'm up on them. And let's see what happens from here. Any other guys leaves questions that I can answer? Because in leaves, basically, it gives you flexibility to play around, right? I mean, that's what basically leaves are. Parking and finding leaves, it depends on some tickers, what you're looking at. Like Amazon, for example, I'm simply looking at the monthly chart, not the weekly. I'm simply looking at the monthly breakout. If the monthly breakout works, I think it's the risk reward is in my favor on Amazon, right? So Amazon, I'm simply looking at this monthly breakout if it's in play, right? Maybe they announce a split, maybe news come, let's see, right? And if Amazon dips, I'll simply average down on those leaps and then exit at break even later on, all right? So I'm simply just looking at this hold and then a breakout in the coming weeks, months. T said he'll be adding Baba leaves with Charlie Munger. Yes, Charlie Munger definitely brought a big position. I love Baba myself as a company. And if T has, maybe I'll jump in with him later on in December or whenever. So does bear spread? Yes, we'll see. With bear spread, Ricky, basically you're locking in your principal, right? I mean, for example, right here on Lucid or a Ford, I took the trade off here. But with bear spreads on leaps, like when your leap is up huge, and you can take back that principal, right? When, for example, Lucid, if my leaps are up huge, and I can lock in my principal by selling a much further out call. I have this, the spread is free. You do spreads, so you understand that easily, right? So on my Lucid, like I explained, I got the 30 calls, right? I got the 30 calls at $8.60. And if I get the chance to sell the 80 call at anything above 860, I'm going to do it, right? I'm going to do it. So that way I lock in my principal, right? I lock in principal. This entire spread is free from 30 to 80. That's a 50-point spread, right? 50-point spread. That's free. Value is $5,000. A free position, right? Until 2023. If Lucid continues going up and holds, that's in my free money. And if Lucid dips, maybe I'll buy the $8 calls back for less than $2. Now that $6.60 I made on premium collection on Lucid to the downside, when they find support, and now I'm holding these calls again. And maybe Lucid rips again, I can just hold these calls because I've covered majority of my position, right? So that's what I'm trying to do with my leaves, because now that's money just sitting in my account, acting as my reserves, and as long as the stock continues going up, if it doesn't, if it comes down, then I just buy back the calls which I sold. Papa Ganush, it depends. It depends. Like on Ford, my maximum is 500%. On Lucid, because of the increased IV and increased the prices on options because of the big squeezes. On this, I'll probably so what's $860 to 5,000? That's what almost more than that's almost more than 500%, right? Which is not bad. That's a 500% plus spread free, right? To give you an exact percentage, I'll give it to you right here. How many percentage this is? So that's almost a 600% sitting here free for $5,000, right? I mean, it's free if you lock in your gains. So it all depends. Apple, T bought in a position in Apple last week, and then I believe LB followed. I'm not sure.
I stopped at.
Okay, so T sold his for his position for him. I guess it was a fast trade. LB's holding. But Apple, I think it looks great. Is building a bull figures near this resistance. And the best thing about Apple here is that is holding above this previous resistance. So let's go into the price level. It's trying to hold above this previous resistance. So the chart is very similar to Amazon in a way, right? So I think they're both going to break out together if they do. And as long as it continues holding above 150, as long as 150 plus continues holding, the next level is obviously all-time highs, which is 157. And then after that, we have obviously sky is clear towards 170 in my opinion, right? That and Lending Club LC. LB called this stock before the major squeeze, so congrats that you guys had it. And Lending Club, I think, is holding well, a very big squeeze all the way from 30 to 49, right? That's a big move you guys need to understand. And now, as long as it continues holding above this candle right here, which is roughly 42.50-ish, And then the next, if it can hold above 45, great. The next level it must hold is 40. So 42.50 is a must hold in the coming days. Right now, if it continues holding above 45 and takes out this high right here of 48, and if it takes out 48, we likely see 50 plus on this name. All right. So you have to look at all the scenarios. Number one, if it continues holding 45 and takes out 48, you can play this trade up to 50, in my opinion. If it does not hold 45, will it continue holding 42.50 for a nice little dip buy and then play to the top side? Okay. Clove. T, you want to talk about Clove?
Clove is just an earnings play, it's a chart play, it's a meme stock.
No,
So
you have to come here.
can you guys hear me?
Yeah, T, you good?
You're good.
Yeah, with Clove, it's basically an earnings play. So they have earnings aftermarket on tomorrow aftermarket. So the meme stocks were running. So kind of got into that one based on like, see if we get a nice pop on it. It's been just holding there, making a base. Obviously with earnings, anything can happen. If you don't want to play options, equity might be a nice play on this one. Earnings, you guys know anything can happen, but you can see like as Ricky is drawing, it's making a base there. So if we hold that base, maybe we'll get a squeeze. I think also in the infrastructure bill, there was something to do with Medicare in there that kind of will help these guys. So yeah, Clove is just an earnings play. And also with DPRO, guys, if you're playing that one, they have earnings on November 9th. So just be careful. They do have earnings. It could go either way. We did buy ourselves enough time. So we do need good earnings in order for those options to play as well.
Right. Thank you. T. Yeah,
No worries.
good. Something else?
No?
No? Okay. All right. So Close being higher highs, higher lows, and as T was explaining, they do have earnings, so you want to manage your risk. But I think if it can go above these levels right here, which is roughly, let's see. So as long as it can hold above this 850 mark, right? If you guys get this 850 mark, and I think it has a lot more room to run. But again, earnings will matter. And DPRO, which we're looking at, as TA said, they do have earnings coming up. So if you guys follow, one thing I like about them is that they're updating their Twitter page a lot. Like, you know, they're always on top of their thing. So a lot of participation from the management, which I really liked, right? But DPRO, they have earnings. So earnings will give us a move. So let's see. So look into this, I guess, and see if you guys like it. Airlines or cruise lines? I would go a little bit in both, maybe. Right. I would probably go in, I think cruise lines maybe, because cruise lines, I think I have more, like I think I'm leaning more towards cruise lines, because airlines, let's see, a lot of expensive airlines compared to cruise lines. But I would probably go with cruise lines for the long term, I think. And keep in mind, the only thing is the vaccination, right? I mean, if they ease the restrictions for people traveling, right? But I think I would go with the cruise lines more over airlines. Some of you guys might have a different opinion, but I would probably go with just leaps in CCL and RCL, and or half. Some airlines, some leaps. Yeah, CCL is good because you'll get cheaper leaps on this, I think. NCL, Lish, Norvin also not bad, right? So I mean, it's trading on the same price. RCL leaps will be a little bit more expensive because of the higher stock price, right? RCL is already breaking out. In fact, it's near the resistance. So RCL looks better technically. NCL Lish, let's see. I mean, they're all the same, but RCL is trading near the highs, and CCL is also a little above. So I think RCL is the best looking chart for me personally, because it's trading near the resistance. If it goes through, I'll probably see 114, 120. Any ETF recommendation?
I do have two.
T has two, so I'll let T talk.
One ETF would be KWeb. That's the Chinese ETF. And the other one will be EWZ, which is the Brazilian one. So those are two maybe you want to keep an eye on. You can see that the KWE, the KWeb, you can see Ricky has the chart on the screen. You can see kind of it's making that base there now. So if Chinese name decide to wake up, that will be one to keep an eye on. EWZ, like I feel like that one has been making higher highs, higher lows. It did kind of break below 30 there. I wanted to see that hold, but if it does bounce back up and we see emerging markets recover, this will probably go back to 40, 45. So just another one to keep an eye on as well.
All right,
Those are two from the top of my head.
So these two, which T recommended? I think that's good. That's actually good for ETFs if you're guys are looking for Brazilian and K-Web, right? You can diversify, and then obviously you can look at some band actors and some other ETFs. So see the one that we have, SPY, right? Q. These are already so high. These I would probably buy like on a dip, right? If I was to buy, they're very extended and or scale in. I would say scale in, right? I was talking to my brother today. He wanted to get into crypto a little bit. And I told him, you know what, man? Instead of putting whatever amount you have all at once, how about you start scaling in every week or every month, right? So for example, if you have just an example, if you have $100 that you want to invest, just an example, right? Using a low number, instead of throwing all 100 at once, how about putting in $10 bi-weekly, right? So that way you get the best average, right? So let's say you're buying something. Instead of buying it here, if you're doing bi-weekly, you'll get these low averages. Like you'll get the best average, right? I mean, so you do a bi-week, or you can do a monthly, you can do a quarterly, you can do every 6 months. It's up to you, right? So you get the best average. So ETFs, any long-term investments, I always recommend scaling in. You don't have to put all the money all at once, unless you know something. UFO ETF. Okay. Procure Space ETF. Okay, so this looks pretty good. It looks like an IWM chart. So IWM is another one that you can keep an eye on. It's a little expensive though. But so UFO, right? I mean, this is a signal. It's, I think, made a little spaceship kind of pattern, inverse head and shoulders, right? So it might break out soon, right? This actually looks a lot better. The reason being is technically, I'll show you why, right? You see this base, when it took out, the best thing is that it's holding above this entire base here. It held above all these levels. And once it breaks out here, the major move would be towards 40 to 50 bucks on this ETF, on the UFO. What else we have here? ABBV. 654. So we'll take some chart requests for the little time that we have. For the leaps, I hope it made sense. But again, all the premium members, I'm in the group all day. There's some more things that maybe I wanted to cover, but I don't plan these sessions before. I do them live, like from my head, what I know, like right, what I've learned. Now, I like it. It's ripped a little bit here, so the options will be priced a little bit high. But if we can continue holding here above 117 above Fridays, I think we might get a move towards 119 and towards 121. So if it can continue holding above these levels, and then we take out the high here 118, I think you can get a move to 120, 121 for a trade. And PayPal. Stock that we bought. So stock PayPal was called out already a few days back, right? I got into 235s right here. I was looking at the pattern breakout. We were looking for a trade. One thing that I say over and over, I'll repeat it one more time. We got the trade on PayPal, right? Our trade was simply this pattern right here, right? When we bought it, our entry was 5. Our entry on PayPal was $5 or 490, and these options run all the way to 7+. It was a trade. If you were trading it, you should have took an exit. I was playing for a little bigger move personally. I'm still holding. They're still at 5. It's building a strong base here, right? And then the next 2 moves they gave up. We have earnings on Monday. If the earnings are great, I'm looking for a pop past 240, right? Which will give me a nice return on the options. If the move isn't great and we get a downside, then we have more downside on PayPal, right? Our next downside is all the way right here towards 210, 212 area, all right? Or maybe possibly 220-ish. But PayPal earnings on Monday, so not much to say. If earnings great, numbers great, then we see a pop on it. So it all depends on earnings for PayPal. And earnings, as T said, they're always risky. There's nothing guaranteed in earnings. It can go either way. So PayPal has earnings, but again, it's at a very major support level. All right. And LSPD, my stock life chart of the week, right? The reason being, it's at a very long-term trend line, right? Before going further down, we might get a bounce. It got bought out twice on Thursday and Friday, LSPD, Lightspeed, right? And our measured move would be towards 82 bucks, the first target, right? Which is our 200-day moving day average. And around here, we might even go further down, or maybe we continue going up. As long as it continues holding Friday's low or Thursday's low, I think we have a move higher on LSPD, guys. All right. So a long-term trend line which might be respected and held. Okay. So LSPD, keep an eye on it. I am not in yet, maybe on Monday, let's see. Right, last week we had NNDM, if you guys are chart of the week, and it gave a nice little move for a trade. See how this, if you were trading it, it worked out great. It's up to you to take your profits, what you do with it, then it gave up gains. Let's see if we can reverse again, right? Then another chart of the week before that was Chewy, right? Chewy was the 2 weeks ago chart of the week, right? And then it also gave us a nice little move, all right, all the way to the upside. And then before that, we had Baidu as a chart of the week, a bull flag breakout. It gave us a nice little breakout on a bull flag, right? So we've nailed every single chart of the week so far. Let's see how LSPD does. And before that was Nike also, all right? And then Nike gave a very nice move, all right? And so LSPD, keep an eye on it. Baidu, Chewy, I think they were all found by Boogie for chart of the week, so you guys can give thumbs up to him. And I think, guys, this is good. Thank you so much. It's almost 7 o'clock. I hope you guys picked up something from this leaps. I know there's a lot more. Just remember one thing, leaps. Just remember this: buying time equals chances of being right. More chances of being right if you're buying time in options. All right, more chances of being right if you're buying time in options. All right, those that follow our leaps, and you already know the performance. So right, other than Baba, I think all the stocks were nailed. And rest it depends on how you manage. Watch our other sessions if you're a new member, right? And thank you for attending. Thank you, T, for tagging along with me. And Sid Singh, you can find all these in our premium chat on Discord sessions. If you're not in, please go on our Instagram story and follow the steps. You can join our Discord. We do have a first month coupon if you're interested. And yeah, thank you for attending, guys. Thank you so much. We'll see you guys back in the chat. Any questions, just tag me on premium. Thank you.